No problem. Hi everybody, we're in Discord chatting with Scope, who's going to be talking about live smart money and other smart money concepts. Right, we're recording.
Right.
There we go.
Can you see my full screen now, can you?
Yep, we can't see full screen. We can see, yeah, your screen plus Discord on the side.
Right, so I've got it right now. Yeah, I will add you, Nimzad. Right, so hello again, everyone. This is just an update on my trading strat. For those who have followed in the Discord, I said I would be writing out like a rule-based a set of rules out in the channel. I have done that. They're pretty much the same. On my last stream, I wanted to show you this, what I found. What I did, sorry, this was on FOREX. So obviously I was showing you the crypto before, and I wanted to show you that it works on FOREX as well, and it's much leaner on FOREX. For anyone who would want to be in my channel, it's here underneath my scope setup, SMC with scopes, and it just gives you. It's big enough, David. Can people see it?
Yep, absolutely. We can see it. No problem whatsoever.
Just gives you like the definitions of the actual strat itself. It gives you all the things that it uses, a little write-up and some examples, and then some trades to follow. The trades that I've put in to this are all trades that I have taken myself. So I'm not just trying to show you something I've seen and thought it would be a good idea to show you. I'm showing you something I've actually traded and found it profitable, and it works. So everything you see in here is what I've traded myself. All the stuff that is in here is all my work. I've typed all these out myself, put them all into PDFs so you can go across them. And you know, it's all ideas and things I have learned from taking paid courses and obviously practicing myself. For those of you who are in my channel already, there is there is a few already in there. I'm hoping you've enjoyed it so far. This is the rule for follow the trend. Now there is a rule. There's a rule set for break the trend. So obviously follow the trend would be, just make this a bit smaller. So follow the trend would be, it would be kind of, let's say, so follow the trend would be when you're already in a confirmed downtrend. So that would be the follow the trend. So you're just following each time, not obviously hitting the trend lines. Obviously, it's in the downtrend there. it's in a downtrend from up here. This is just a little pullback. So this rule set, what I've got here, is just for follow the trend. There's another rule set I've just put in. What I've been doing is, if a second, let me get my thing up. What I've been doing is I've been doing it all in a what this is called now, presentation or PowerPoint. Break the trend is, if you read these rules, break the trend is, it's kind of the same, but obviously there is a couple of differences. These are all the rules for follow, and the only difference is with break the trend and follow the trend. Obviously, follow is you following the market. Break is when you get a breaker structure on your higher time frame. And the only difference between these two, between the rule sets, is the breaker structure wave. So what that is second. This is your follow the trend. So when I put the other rule set in straight after this live, when you look at a market and you see this is follow, when you're going up, this is all your follow the trend, marking like POIs out. I know it's only a rough little thing, but when you are marking your CTSs and your BOSs, you're never breaking these structures in the follow the trend, but once you do, then you switch from this rule set to your other rule set. There is some differences. You can already see these rule sets, so you could follow these, but when you get breaker structure, so you get this, you're looking at what the wave has done. So I will put these pictures in because they're helpful. I will put these pictures into the group into the channel after I've put the rules for break the structure in. So when you are breaking the structure, and I think this is where the best moves come from, because if you look at your follow the trend, you are getting, if you look at your follow the trend, really you can up your time frames. I use the 1 hour and the 15 minutes. So I wait for my breaker structures, or I wait for my CTSs on the 1 hour, and then I watch the pullbacks on the 15 minute. So when you come down to reach any of your institutional candles, follow the trend. The best place and the safest place is going to be if you get in here. The best place to catch it, to take your profit, is going to be there, unless you look on the 4 hour chart and the high is up here. But the safest way is to literally take a structure. Whereas when you get a breaker structure, so just it's just a rough thing. So if you just go in there, just say, I know you're not going to get a 13% move, but just say that is where you've got in on a POI. this is a follow the trend. Whereas when you get break the trend, obviously you can get in on, just say, this one here, and you can target like your lows. So you can see the difference between a break the structure and a CTS, continue the structure. So what happens when you have the break of structure, because people are getting this mixed up a bit, because I'm getting messages, and the way that people are thinking to do it is, you are right by marking these, but with the rule sets, this is one of the main things about it. And it's where you get, this is how people mark out their wrong institutional candles on your break of structure wave. So just take these as your break of structure waves. So what you want to do is analyze when you get a break of structure on the higher time frame. You want to analyze that wave, the breakout wave. So, and there's some rules to these breakout waves. I'm not going to write all the rules in here. I'm just going to literally name these, and this. Just mute my phone. So this one will be, just call this 1A. This one will be okay. So these are the main, well, kind of the main differences between follow the trend and break the trend. So let's take this. This is your breakout. We'll just say this is your breakout wave for your break the trend structure. So when I say analyze, I mean I use this Sonar Lab imbalance finder. I don't know why, it's just been on there for ages, and I don't know if you can see. Don't look very clear, but you see these little spaces at the side of my candles. That's marking my imbalances out, and the ones that get filled are literally, that's an imbalance, and it's all been filled, every bit of it, as you can see with that wick, and they just disappear once they're filled. So we've still got an imbalance down here, an imbalance down here. So what's that? I've lost it. Oh, yeah, there. So let's take 1A as your breakout wave on break the structure, break the trend. Just get a drink, 1 second. So the only difference between follow the trend and break the trend is these. That is the only different rule sets in there. 1A breakout wave. If this is your breakout wave and it's got imbalances all the way up it, it's 3 different rules. That's all it is. If it's got decent imbalances all the way through it, then you fib the breakout wave from top to bottom to find your candle in this area, or anywhere under the 50. But for the best R&R or the strongest, I would suggest being around here. So now let's take 2B, for instance. If there is imbalance in, remember when I say pulse wave 1, pullback, and pulse wave 2, but on the higher time frame, that would be probably just a wave on the even higher time frame. If there's imbalance in here, that's not being filled. So you have some like imbalance there and there. And also you have imbalance here and here. You would then fib. From the bottom of the breakout wave. The reason you would do that is because balance has been in here, but it's not been filled. So could potentially see on this breakout wave, could potentially see something like this, and then people might jump in and say there's an institutional candle here, which would be, if I just 1 second, I just fibbed this wave. People might find their institutional candle here in this 61.8, but it could work. But the reason why it couldn't work is because you've got imbalances here, and obviously imbalance to me, I don't enter on imbalances or anything like that. Like I always say, they're just signals to me to tell me smart money's in the market. So the reason why you could mark this up, and it could work, get that and then a pump up, but there's other imbalances around here, so that is why a lot of people will again mixed up with break the structure and continue the structure. So you're more than likely, if there's imbalances down here, you're more than likely going to see price try and come and touch these imbalances, or at least one of them, before it goes up. And that is the reason you fib the full lot. If there's imbalance there and then a little pullback and imbalance there, you don't just fib from there to there, even though that would, if that was the breakout wave, break a structure there, you would still have to do all that, because this full move has got smart money inside it. It's got imbalances all the way up, so you could potentially see a big pullback into any of these imbalances, preferably this one. So then you get to the 3C, which is there is imbalances in both waves. There is imbalances in both moves, but smart money has already pulled back into the pulse wave 1 and gone and filled the imbalance to get all the orders. And so therefore on this 3C, you would only need to fib where the wave where smart money is. There is smart money in this wave, but it's been manipulated and it's pulled back and filled it. So therefore, you only need to concentrate on the most recent bit of smart money. So that is the difference between follow the trend and break the trend. Just them 3 waves. Everything else is the same. Literally just these 3 waves. You just need to analyze the breakout wave. Just need to literally analyze this. If there's imbalance in this wave, there's imbalance in this wave that's not been completely filled, and this has only been a small pullback, then obviously you fib for the full lot. This has filled all the imbalances and had a deep pullback into a discounted zone. And all the imbalances are filled, the big imbalances, and you just need to fib this wave, because this has already played out, this has already pulled back into this, and it's already filled imbalances. So that is the only difference between your follow and break. So I'm just gonna go this. Wow.
Hey Scopes, can I ask a couple of dumb questions?
You can if you want, mate.
Great. What's POI and what's CTS?
Right, so if you look here, who's speaking, sorry?
Oh, it's Andrew. Yeah, Gamla. Yeah.
Right, so if you look, can you see my Discord screen?
Yep.
1 second. Are you in my Discord?
No,
I mean, not my personal. Are you in DaviddTech? But are you in my group, SMC? This one, SMC with Scopes.
No, how do I join?
If you 1 second, let me just.
I'll send you a request.
Yeah, and I'll just add you to it. All I need to do is type your name. So, when I introduce you to me, when I add you to this course, you'll see everything I speak about. These are the definitions, and then obviously when you come onto a chart and you see stuff like this is where your retail traders are, this is where your smart money is, because there's imbalances. Retail can't cause imbalances unless every single retail trader placed trades at the same time. So let me find where this is for you. It's pretty simple, really.
Yeah,
it's POI. Oh, sorry, CTS. What did you ask for? You asked for POI, didn't you?
Yeah, POI and CTS. Yeah.
Right. So yeah, CTS is just BOS is break of structure. CTS is continue the structure. And if you look at this chart here, these are CTS and BOS. So CTS is when you have every time you have a pullback and from a push up, and then you get a natural pullback with the candle here showing a real pullback. Whereas you see this candle, I don't know if it's very big for you, but you see this candle here?
Yeah.
This little black candle, that is not showing the start of a pullback. That's not a strong enough candle to show a pullback. This one is, it's a nice big candle. This one is, it's a nice big candle. This one is, it's a nice big candle. But anytime you get little candles like this one is. So that is where you can potentially put your CTS line. Then you can literally, if you see these big candles, you know, well, you don't know, and nothing's 100%. Nothing I say is 100%, but it's just how I do things, and this is how it works most. Well, you can see what it looks like on charts. So when you see the big candle, you can just mark across, and that's your CTS line. Mark across, that's your CTS line. Mark across, that's your CTS. So then when you get the pullback down, and then you start to see weakness here with like with smaller candles. Sometimes it just goes into a range here and then goes. But it comes down again. You're seeing candles starting to go into a little range here. One little pull down, and then you get two big candles or two decent sized candles like there. You know, then you can mark that bottom, the lowest point of that, after you see two decent candles, two decent candles, two decent candles, three decent candles. You know, you can mark them as your BOS, because you know then that these candles, they outweigh the last candles or the last few candles. So you know you can mark this out as your BOS and your CTS. So you can get your CTS and your BOS straight away.
Nice.
Now, your POI is, here we are. So your POI, it's like it's an order block. It's a point of interest. It's an institutional candle.
Yeah.
So if you look at this chart, and look, this is what I'm saying here. Look, with these waves, you're getting balance. You fib this is one full wave. You know, with the charts I've just been putting on my screen a minute ago. what I drew on. This is one full wave. There's imbalance in the wave. This is your starting natural pullback. So then obviously coming down, you've already fibbed this, and just say your institutional candles here. That would be your order block, if you want to call it order block. Yeah, it'd be POI, institutional candle. It's just like a point where you want price to come back, touch, and have a reaction off. So what happens when what happens with this when you see let me just go back to this first one what I had on a second ago. Everything's in here what I was speaking about and show you, so I'll actually not be able to find it now. Yeah, so what happens with these is when you watch your pullback waves, you can watch them on the 15 minutes, and I'll probably be better off showing you on what happens with your POIs? Say you fibbed. Just follow it. I'll add you to it, and you'll understand everything I say. This might sound a bit daft to you when you're first thinking, but once you read through, you'll understand what I mean. So we're looking for the POI. Just say this is my hourly structure. Structure. So you're looking for your P, and then you mark that out as your POI 1. Buy because you're in an uptrend. And then what you do then is when you see these candles, like a big candle showing that this moves over, you can then flip down to the 15 minutes. Watch this. This pullback, 15-minute time frame to the POI. When the low time frame POI, when the low time frame candles hit your high time frame POI, then so you can delete that fib. You don't need it. That's all you need on your chart from following this trend. So what you do then is this is your hourly. Let me change this minutes. So this is your hourly structure. You've seen it do the CTS.
Yeah.
The 1 hour. You've watched this come back. And this pullback is probably into a decent area of counted area of this, and then you see 2 nice candles or a couple of candles or weaker candles down at the bottom showing that it's over. So then you can mark this as your break of structure on the hour. So we're not, if we break this, we're looking for break the trend. Break this, we're looking for the trend. So then when you get up here, you see 2 candles, you can drop down time frame. Watch this on the 15 minutes. You've already got your institutional candle or POI marked out on your hourly. What you want him to price to do is hit this and eventually you're expecting price to come and CTS again because it's not broke the structure. So you're expecting it to continue the structure.
So that was the take profit you were talking about earlier.
Yeah, you can look at that. You can look at that, but I use the hour and the 15 minutes. I use the hour and then I use the 15 minutes to do this, to watch the pullback. But this institutional candle POI, you can fib this and join into the market at just above 30, which I always do. Stop loss just below, targeting this CTS because you're expecting if price comes here to bounce up here. However, jumping in off the hourly institutional candle, I have done it and I've had very good trades off it. But jumping in just off of this candle, 1 hourly, it's more risky, and sometimes the candle on the hourly is a lot bigger than the 15-minute. So what I like to do is when I followed this down in 15 minutes, as soon as it touches this institutional candle on the hourly, I mark out the last high of the 15-minute structure. And then now that is the break of structure on the 15 minutes.
Yeah.
So then obviously I'm waiting for them price to come into my hourly POI, and I'm waiting for price to break my 15 minutes, signifying that this whole pullback wave, it's a push up, a pulse wave, and then a 1 hour pullback, but I'm watching in 15 minutes. But as soon as I get a 15-minute break of structure on this pullback wave, I know this hourly pullback is more than likely done. So then what I can do is I can then wait till this breakout wave ends. If there's imbalance in this 15-minute wave, break of structure wave, I can fib the wave, find my institutional candle for the 15-minute then, and to POI by 15 minutes. And I can delete that then, and I can delete that. So then literally fib that little area, or just put it just like a quarter way in with a long, seeing an uptrend. Do that.
All right, and then you catch the return.
And then that, and then I do that. So now watch this. So you've got there a 20. You'll see. You know what I mean. So now you've got a 23 R&R. You know this hourly pullback wave is over. More than likely over. Nothing's 100%. Nothing ever will be. But it's a game of probability. You're just giving yourself the most probable chance for everything to happen in your favor. So
nice.
This is the reason why I like to wait for the BOS on the 15-minute, because the risk to reward. This one now, because I've joined on the hourly POI, which is more risky because you haven't had a break of structure on the 15 minutes yet. You've just joined in here. You haven't had this BOS 15 minutes yet, so you don't know for certain this pullback wave on the hour is over. So, but when you get a BOS 15 minutes, you know that pullback wave on the hourly is now over, because the lower time frames need the higher time frames, and the higher time frames need the lower time frames. It's double confirmation, double POIs, double order blocks, whatever you want to call it. That's the full strat.
You could do that with the 4 hour and the hour, but it's just
you can do 4 hour. I do hour 15 minutes. You can do any time frame. It works on scalping. There's a kid in there. There's a kid, Yorkshire Rippler. He's been scalping it on 15 minutes. However, some of his trades, they are good trades, but some of them is joined in onto like this candle, which is not wrong. Which is not wrong, because this candle could be that big. It could be a small candle, and you could have a good stop loss there. But a lot of the times, you'll find your hour POIs are a lot bigger than the thing. So if you jumping onto the hourly, you've got a 5.9 R&R. If you wait for a break of structure on the 15 minutes, so that's double confirmation. You've got your smart money in the market because it's CTS in, and you've got imbalances going up. So that's like your first bit of confirmation. Then you get this bounce out of the high time frame POI. That's a confirmation. You can take that trade, but you're going to only get a small R&R. So then if you wait for the double confirmation and the double POI, you're going to get a much higher R&R.
Right.
Way more.
That's where your crazy R&Rs come from.
Yeah. That's I always get these R&Rs. But this is what I was trying to show on my last live stream. The reason I can't find it is because if I go to load layout, I've got loads of layouts that I use, so I had it on a different layout. That's why I couldn't find it. But I'm going to show it today. This is FOREX. This is what I mean with like your double POIs. This is you're marking your BOSs zoom in a bit here. You're marking your, here's your hourly candle.
Yeah.
So, like I said before, and here's your 15 minutes candle. Exactly what I've just showed you in that picture a second ago.
Yeah.
So what you're doing is you are looking for the candle, the POI in a breakout. You've had your breaker structure. Nice breaker structure. Had tried to pull back a bit. It gives a decision candle here. This candle doesn't complete this full up movement, showing more buying pressure. So you mark your hourly POI, comes down, delete this. Well, I'll leave it on for now, but you can see it comes down and touches it here. And when I said you can jump in on the hourly, just above the 30, which is, it's a really strong zone, by the way, just above the 30 on your POIs. People wait till 50 or, but I think just above 30 is a good thing. So see, you can jump into it and target CTS, recent CTS, because you're not breaking this structure. That's your breaker structure here. When you're following this market, so you've broke the structure to the up. This now is your breaker structure to the down. This is your CTS. This is your POI because you've not broke the structure back to the down. You've only broke it to the up. This is your hourly POI. So you can join in on the hourly POIs. You're not wrong, but it's more risky. And you can target the CTS on it and it reaches it. But that's just this to one side a minute. That's your hourly POI. So then if you, this here is a 15 minutes. If I drop down to 15 minutes time frame, this is what I've got marked out as I've watched this pullback wave on 15 minutes. And remember when I said you get the movements like this and you mark them out, this is a 15-minute breaker structure area here.
Mm-hmm.
That's where I got this 15-minute buy from. And that's where your entry is, POI. So if you flip that, just above the 30, you're joining the market. Comes down, it does actually go right to there. The early stop chart.
That doesn't.
Oh, actually, it doesn't. No. I mean, I know it doesn't stop you out, but I say it knows. But if I were in the 15-minute time frame, I'm sure it would be pretty close.
Yeah.
But look, like you see, the risk to reward for that is 10.3. Risk to reward for that is 37.4. You know, so if you're waiting for the double confirmation, you're targeting the exact same area, and you're getting much higher risk to reward. And it's just a lot cleaner on FOREX. You can see things a bit better. Here's another one. This is 10-minute POI. You can't find your POI. I do the hourly and the 15 minutes. If you can't find an institutional candle on your hourly time frame, you drop down to 45 minutes and you drop down to 30 minutes. If you can't find one then, an institutional candle there, skip trade. Don't go right low down just to get your institutional candle, because you need an institutional candle on a high time frame and a low time frame to get a double.
An institutional candle's a vector candle, so like those green ones.
What, sorry?
An institutional candle's a vector candle, like the bright green ones. Or
this is not. This is showing the sizes of the candles. It counts the candles, but you'll get stuff like this, look, as well. Like this is your breaker. This is a breaker structure line.
yeah,
So you got a downtrend. You get a breaker structure line, and I know you'll miss out on this, but there's imbalance here. It's a breaker structure line. It is a valid break, but as you can see, you're not going to catch every entry, but the entries you do catch are going to be very good. But in my course as well, I speak about this. Nobody in the world wants to be buying here. Its price is way too high. You could buy there and you would have got some good trade out of it, but the actual rules to the strategy are you wait for the break of structure on the higher time frame, then you fib you fib the breakout wave, and you're looking for price to come below the 50, but ideally looking for institutional candle in between this area 61 and the 80.
Right. So that's a failed trade. That's a trade that you just
it's not failed. You haven't took anything because it's not met your criteria.
Yeah.
Right. You know, so you're getting that pull up there. So you're expecting price to come here. Then you're expecting a little 15-minute POS here. You're expecting to have another POI there for 15 minutes, and then you're expecting to go. You know.
Right.
So that, to me, that's a mistrade, but that's why I've marked this one out, because if you don't get in on the first breaker structure, it's no biggie because you've not lost nothing. Even if it's gone up, you've not lost nothing because you've not got into the trade. You're not going to miss something you never had. You're not going to cry over spilt milk. No, it's done. Done and dusted. You wait for your next one. You, like I say, on to the next. Every time, on to the next. Never mind that one. Just move on to the next. So now this one's POI 4 hour. This is a sell. I use a 4 hour to check for targets. When you're in trades, you can look for, like mine's the hourly and the 15 minutes, like I said before. But once I get in, if I got in here, if the price come back down here and I got a break of structure 15 minutes, bang, and I bought it around here, then I'll open the 4 hour, and you need stuff like this, or you need to see stuff like this, because there's you're not going to really see price smash straight through that, isn't it? It's a good TP, that area. And a lot of the times it will be a level, or can be a failed swing, or or anything like that. But there's quite a few I've gone through on FOREX. I know it looks a bit messy. But, this one's a failed one. I'm not going to just cherry pick things and say, yeah, this one's a win, this one's a win. You've got to be right, and you've got to be truthful. If it's a loss, it's a loss. You know what I mean?
Yeah.
But however, you are getting POI here. Leave that line a minute. You are getting your breaker structure here to the down, and it's a very strong breaker structure. So then obviously this I've marked as, you can see, this is your institutional candle. There's 30% of the mark. It would have been just 30% of this mark. You're in the trade, or you wait for a 15-minute BOS. You're in the trade, targeting lows, recent structure. Like this is a pullback, so you could just target that, but you could lows. There's no like set rules on your TPs, because everybody TP is different. Everybody's got emotions. Everybody thinks different. Everybody's scared and sweats in a trade. It depends on you yourself, but you can see.
Yeah.
But like I say, I'm not just going to show you, oh, you should have, if you would have done this, you would have done this, because here's a loser. Well, it's not a loser, but if you would have joined in on the hourly, like I said, you normally wait for a BOS. There's your BOS on the 15 minutes. This is just your hourly institutional candle. There's your CTS. You followed your CTS, but just say you're in this trade. You're going to try and target lows, or you can target any of these structures. Any one of them you would have got. Let's just say you took profit at this CTS here. Just for the sake of it. You see here, now you've broke this CTS, so you're continuing the structure. You've got your BOS up here, so you're not, when you pull back, if you break the structure up here, you're gonna, the market might flip, but it needs to break it strongly, 2 candles above it. But this is the reason why I think it's not very, it's too risky to enter off of these POI 1 hours, because you can see here price has come up. It's touched it here. So I've marked out. Let me just delete this. These fibs. Leave that one on. So it's touched it for the first time here after a CTS. There's my institutional candle, my hourly. So I've marked out the break of structure on the 15 minutes then. So I've watched this come back up in the 15 minutes. It's your break of structure on the 15 minutes. If you would have joined in on this hourly, you would have been screwed. You would have lost the trade. But then if you wait for your break of structure 15 minutes, because you've got it marked out after the first time it's touched it, now it's touched it and broke it very strongly. You've got imbalance coming down, breaking. Now you get a little pullback here, but like I say, it's only into the 30. Price only goes to the 30. That means there's more there's more potential of more downwards movement until it's had a pullback into a decent area. Now this, because we've had this break of structure for 15 minutes, this is because it's a red box. This is a POI of the 15 minutes sell.
Yeah.
So you can see if you would have joined just above the
just inside the 30, yeah.
Below the 30. Stop loss here. Target this structure, recent structure. You can target where you want, like I said before. A lot of the times I find it a lot better to look, if you look closely at the candle. A lot of the times you'll see that your entry just doesn't get right at the bottom. This one does, obviously, but sometimes when you're in a trade, you set your limits too high. But if you're targeting structure, it might be a good idea to be safer to target closes rather than. Yeah, you can see the work. I mean, you can hold trades, and
it seems like you get healthy risk reward, and you get lots of trades. So, like, you can't target something that hasn't happened yet.
I think the trades.
Jeez.
I think the trades get. I mean, they're all over. Look at these. This is a 54%. I mean, 54 R&R. I think the trades that you get, it depending on your time frames. Obviously, because you go into a high one. I mean, you can look at this strat and you can have a look through my course, and you can add some stuff to it yourself. You don't have to follow it perfectly, and you're always going to look. People always look to better things than that, but I'm just writing down the safest ways that I can, and sometimes I do get good trades. But what happens with, if you look here on the course, you see these trades here. This is just 1 week's worth of trades. So what happens? This is like all 1 week's, all BTC. That's all I traded. So what happens is when you catch a move, because there's smart money, you've caught a move. Let me just put the BTC one. Gosh, you've caught a move from smart money. This is where this started. This is where this one started. No, it wasn't. It was here. So that what I've just showed you on my Discord, that is this area here. So the reason you get loads of good trades, once you catch a good move, you're in with smart money, because this is obviously it's a smart money strat. You know you're in with smart money, and that's why your R&Rs are pretty big, because you're following smart money. I mean, look at imbalances here. This was, you know what I mean? So you know you're with smart money. You know you're in the healthiest, strongest market you can be in. But as you can see, this one, that's one of my little losses what I had. What I showed you, I think it was. I'm not too sure, but it looks like a loss. I don't know if I've just. I'm not sure, but these are actually all my trades what I've just showed you. So what happens with when you catch smart money? I mean, this specific trade was exactly as I said. Price is pushed up strongly to break the structure to the up, and it's broke it. The size of that candle, it's broke it massively. Now look at this candle. This is why this is sometimes when you can enter in your 1 hourly. You know when I say don't wait for an extra confirmation. You could have entered on this one. I mean, the candle's tiny, but it is an institutional candle because it's the last one before the very strong break. You could have entered here, but if you would have had your stop loss really tight up to here, you would have just stopped out. So what I've done then is I've marked out my structure, waited for a break of structure on the 15 minutes. This was the break here, this line, and then obviously 15 minutes, 15-minute POI from this little break. So then look at the wick that it gets me in. A lot of my entries are with wicks. So
Oh, right. Wow.
yeah, a lot of my entries are just, I'm wicked in, so I know, look at the size of it, look at the pressure that come in. As soon as it touches POI in 15 minutes, this institutional area, on 15 minutes, look at the size of the wick back.
Right,
So that was
yeah.
a big, massive down candle, and look at the buying pressure that landed straight into the market. So, you know, even here when it touches here, you get a massive reaction, and then you just get a big massive FUD straight up. So most of my entries, I'm getting this wicked in like this, so I know I'm following smart money decently. You know what I mean?
Right.
I'm in the right place at the right time, or my analyzation's good. But the thing is,
So you're not eyeballing this; you're drawing fibs every time.
Yeah. I don't draw fibs every time. I don't need to every day. Like after you've learned it, you can just pretty much see it. And you know, like on a normal chart, you can be like, right, that's, I don't know. You could just see this wave here, and if you're looking at this full wave, you know a candle in the last like quarter of that wave. You know what I mean? That's what you're looking at. That's around the 61.8. What happens when you follow smart money? You jump. When you catch something nice like that, you can get a full week's worth of trades, brilliant trades, and you can like literally hammer your. You know, you can get a massive gain on your account, and then look what happens after. I don't get no trades for ages because this and this, because I'm on the hour and the 15 minutes, this line, that line, the range. If I would have gone down time frames, I would have got loads of trades. But for me, I got like loads of that. I think I got 7 nice trades in 1 week. I think this one's in it as well. But once I marked this and this, I mean, you can trade internal breaks and CTSs if you want, but it's the best places to trade are when it breaks proper structure. You know, the last major structure kind of thing.
So the last question really, but like this seems so methodical and based on fibs and structural changes. Is it being turned into a bot?
Oh, I'm not sure. We're going to try. Sometimes you have to wait for a long time. In here, I had a few trades. I marked every trade out. I think I have actually marked every trade out in that area. This here was from ages and ages ago, and that is an entry. What I waited for. So I marked this out ages and ages ago, this level, as where I want to buy. I mean, when I want to sell. And I had it marked out for ages, but while waiting for these areas to come into play, I just do stuff like this and get little trades in here. But, but as you can see with these this week's worth of trades, losses are minor, wins. But once you catch a first decent move on smart money, you normally can carry on catching, you know, because you can catch that, then you can catch a little pullback, then you can catch the next pulse wave. So that, just say that would, I don't know exactly what it was, but just say you've got like your structure, and if you caught it nicely, you could catch. You've got this, and then you've got this, which is you break a structure here. So then you've got a pullback into the 61.8, then you've got another CTS, then you get in around this institutional candle here. You've got another order block there, that's your second POI, you get in there. So then you've got one big trade. So you now know you've got nice, good imbalances in there. You're with smart money because your trade's blown up. There's a lot of retail and a lot of smart money traders all jumped in together. That's why the market's pushed higher. And also, what happens is, and if you backtest what I'm showing you now, you will see that it's pretty accurate. R&Rs are big. It's pretty accurate. You get if you're marking out properly, you get reactions at nearly every single thing you mark out. Not everyone works, but the majority, I'd say a good 80% of the times you're marking something out, you get a reaction from there. That don't mean set a limit order at everyone, or it don't mean trade everyone. But what I'm saying is, it's got potential because you're getting reactions from everyone. Not the same size reactions and not the biggest of reactions, but there's always a reaction at any of them. And obviously, it's before support and resistance. So you're not trading support like you're not trading like your retail support and resistance. You're trading literally with smart money because it's happening before you're seeing it. You know it's going to be happening before it comes. I'm not saying you can predict the market, but you know if you've already marked this institutional candle out here from this breakout wave, you've marked an institutional candle out and you've set a limit order there, but you're up here. You've got two down bearish bars to show you that this pulse wave's over and there's no more sellers in order for the price to keep going up. You know it starts a natural pullback, but you've already got an institutional candle out marked here. So obviously, I'm not saying you can predict market and stuff, but you're in a very good position if you're marking that out and then it's coming down and it's reacting to it, and then you get another one and it's reacting to that and it's going up. So you're in a very good position. And
yeah, so you're tipping. That's your edge, is that you're joining the market where smart money's joining the market.
Yeah. So you know you're in a good position. Like, and like when people say, you can't predict markets. No, you can, but just backtest this, and you'll see what it's like. So when you catch this second POIE, you've got this long. You now know then you've got this you start a little pullback, so you can potentially catch the short to the next institutional candle, and then you can catch the long, and then you can catch another short. Do you know what I mean? Because it doesn't work every time, but you can catch it all the time. But what I like to do is the first wave, the breaker structure wave. This is your breaker structure line. The breaker structure and the first pullback. That is the signal. That's not you can enter on it, but it's more risky because you haven't got very much confirmation there. You've got confirmation because it's pulled back into the discount area. It's pulled back into an institutional area on this first pullback. But for me, I look for the imbalance in there, and then I look for the imbalance coming down, and I look for a breaker structure on that one. When it comes back down here, this is where I look to enter, around this area. So I'm waiting for that breaker structure on the 15 minutes, and I'm entering here. So then I'm following it up to this CTS, or if there's a 4-hour high here, I'll aim for the 4-hour high, or just below it, or just at the closes. But for me, a lot of people are just seeing breakers. A lot of people are seeing a breaker structure, and then they're like, right, we've broke structure. We're gonna go to right up to here and right up to here. But so when you've got these people like joining in here, and they're holding positions for ages and ages. Well, I mean, I do hold positions for a long time, but you get these people like saying we've broke structure here, but then what they sometimes do is this is how they get caught out, because if you fib that, because it's a breaker structure, they fib this wave, and then sometimes you only get like, it goes up and you only get a pullback into the 30, and then it keeps going up. So they'll wait for that pullback at 30, and then they'll jump in there because they think it's thingy. But the strongest place to wait is when it comes down to these areas, because by the time that goes up, it can go up, and guess what? You've only pulled to the 30, and it will more than likely come back down and now that's killed all these people's stop losses because it's only pulled into a high price. It's only pulled back to a price that's too high for smart money to consider pushing it up anyway. This is where smart money wants to come. This is where smart money needs to come.
Is that the 0.618 and the 0.75?
Yeah, 0.618 and 80%. That's what it is. And normally, like a lot of smart money people, traders, they like to see it at around the 75% line for them to consider buying or shorting. That's where they want to see a pullback from. But this is how a lot of people get caught out, because they'll see a break of structure, sorry, and then they'll only wait for a pullback to the 30. If I only see a pullback to the 30, I'm not even interested in entering that market. I'll keep an eye on it, but I'll set my level. I'll find the POI here, and I will set an alert at that level. So when the alert is at level, I'll load my chart up. I've already got this. This would be POI buy. For the 1 hour, I've got my alert here. I get my alert, it's come back down. So then what I do is drop down to the 15 minutes and I analyze the 15-minute structure in this. And then I wait for that break of structure again. So I'm waiting for price to bounce through that. And then I'm waiting for the institutional candle of this 15-minute BOS wave. And then when price comes down to there, that's where I'm entering. You know what I mean, kind of thing.
Yeah, totally. Yeah, man, you must have patience to.
You don't even. To be fair, I don't even need to trade. I'm not even. I love trading. I've chose to trade, but I don't need to trade. People just go to trading thinking that they're going to make loads of money, and I'm not even bothered about making loads of money. I've already got money, so I'm not. It don't matter to me. Do you know what I mean? Yeah. I mean, I haven't put all the entries on because it blocks the chart up. But you can see. This is a lower time frame POI, and look what it does when it gets to it.
Mm-hmm.
So when this is your wave, that's the wave. This candle is 60, the 80. Obviously, it's above the 50, but you can have a candle that goes all the way to 50, but as long as it's in the 60 and the 80, but you see what I mean? You get wicked into entries, and then it goes down. I mean, not every entry is solid and flies through, but here's another one. Got this one probably what you could have maybe you probably would have lost if you would have joined on that one, because look, it comes down, and obviously you are wanting, when you're joining into these type of markets, you're wanting your stop loss as small as possible. Just under the POI kind of thing. But the losses that you get are minuscule compared to the wins that you get. I don't know if I've practiced it.
Yeah, right. So if you're risking a small amount of your portfolio and the strategy is working, then
if what? Sorry.
Well, that's sort of like 1% of your trading account, and then it grows in multiples, and if I've understood the strategy correctly, then you're basically saying that the risk to reward is super high and the losses are quite low. So if they're not, then I'll catch that I haven't understood the strategy because it's not working. Yeah.
Well, like I say, these are my losses for the week, a 9.5, and look at the leverage I was using: 50, 50, 50, 100 on there. But this was the 30-day curve on the account, and that was your 7-day curve. So all that move was all these trades.
And you've pulled this together from various like smart money courses.
Yeah. I've paid everything I've done. I've done another video, and it covered like people have watched like Meta Kaplan, and they watch all people, they watch ICT, but everybody does it. So what I like to do is I like to find something new and something fresh, something that nobody uses, or I try and work out stuff to do. I mean, this is a sub account I've got this on. This isn't even my main account. This is just like a sub. Yeah, I've never put more money into my sub. I've never had to know what I mean? I've not killed any account ever. So I've lost money, but I've never ever killed any account. And this sub account, I've traded like loads of different stuff with it. But for the last like 30 days, not now, it's a bit more than 30 days, but I had no trades for quite a while now. But I was just, because I was putting this course together, what point would it be me just putting a course together and not showing you what it does? So for 2 weeks I traded it, and this is a result from 1 week. There's results from the week before. I mean, they will all be in.
Yeah.
They'll all be in here somewhere. I'm pretty sure. Look, these are the week before, and this was following exactly the same look. This was following exactly the same. So this was the week before. So all my trades was obviously mint.
And that double confirmation going from the hour to the 15-minute, is that pretty much you, like, or is that like a known strategy in smart money?
No. It's just look. People use different time frames. I've seen quite a lot of smart money using time frames, different multi time frames. I mean, I started watching one I've not seen before ages ago, probably, I don't know, 4 months ago, and it was actually it was really weird. It looked like I don't know, but he went all the way from like a 4 hourly, and he went down to like the 1 minute to get his entry. His entries was super, but it just took so long, you know, when there was so much you wanted to get in. I mean, it just absolutely, like, it would have just done your head in waiting for that 1 minute, and the moves that you were looking at, the little breaks on 1 minute and that, it's like, it looks good, but for me to do that, I'm a very busy person. I'm always constantly on move, so I won't have time to do it. And this for me, it's literally,
this is your low maintenance 500% return.
Yeah, it's set and forget. It's set and forget. That's all I do. If I get breaking a structure, it's set and forget. Because if I this is the 15-minute. This is on the course as well. This is exactly the map, the SMC map, how you want to do it. Your institutional candle. So what I do is, if I set alerts at all these levels. So I'll set an alert there, and then when that alert's gone, I'll set an alert there. So when that alert's gone, I'll do that, and then I'll set a limit there, and I just set and forget, and I target this high or just below, and it just, a lot of times it works. But if it loses, you're losing next to nothing, you know. So, and I don't use all my account, but I certainly don't. But these are the type of losses, size of the losses, and these are the size of the wins. But all the trades that I have put in here, I have taken, as you can see, all what I've taken. I mean, this is a bit. You'll see when you're going course and you read into that, it's a bit much. It's a bit overkill. I don't see all that. I don't write it, but I'm just like showing where retail has lost money there. I'm not saying I'm not a retail trader, but I'm trying to follow smart money. So, yeah.
And how long have you been trading this system?
I traded this quite a while ago, a long time ago, but not like years, probably, I don't know, 3 months ago. I started doing stuff like this. I've done smart money for quite a while, but I started like looking at this. I think I bought altogether probably, 16 courses altogether I bought. They're not all expensive. I think some of them were like 89 quid, some of them were 60 quid, some of them were 30 quid. They're not much, and a lot of stuff I've watched is crap. I'm not saying it's crap, and I'm not saying the teachers or the people who do the courses. It's just something I've already seen. So sometimes I bought a course and it starts going on, and I think, well, I already know what he's going to say. Yeah, you know what I mean. Yeah. So I just try and look for something new. But I'll tell you, this is a good thing. 4 a.m. candy looks here, and it's a safety candle. So when you're in a trade, and you can back test it. So when you're in a trade, let's just see if we can find one here. What happens is, just draw one on here. So when you're see, well, this is your, obviously, BOS and CTS. This is your BOS lines. So what happens is, say if you got in this trade right down here, or just say a million people were in this trade. Stop loss, because that, just say that is, just say that's that. Right, so you've got this little breaker structure. I'm not going to say they're going to get in here, because nobody would, but if they get, just say they get into that trade, just say there's like quite a lot, stop losses just be there, because it's in like imbalances and that. But then what they do when they're in the trade, every time they get a pullback, they will then move their stop loss to here.
I've done it.
Yeah, and you just get wicked so many times. So what I've got is, it's a safety candle. I don't know if, well, like I just showed you there, there's a few people that have never heard of it before, and I don't hear nobody speaking about it. So what you do is your pullbacks. Every time you get in your pullbacks, you look for when you're in a trade, you look for where it's pulled back to, and what candle it's pulled back to. So let's just like take this one. I know it's not good. I'm not going to be able to pick one straight out for you, but say sure. Let's look at this one for a second. So you've got this, got that. So if you look at this as a trade, what I've tried showing in my what I'm going to be showing, and what I've tried showing in previous streams, is the safety candle feature is, and I will go into it in the course in more detail. It'll be on extra information at end of the course. So what I've been doing with this safety candle is when I get a pullback, instead of putting the stop loss just there like this, you look at where the price pulls back into. So your stop loss is there, but you look at where, and you can back test this, and you'll find it's absolutely mega. So when you get a pullback, you look left. Obviously, even if you wanted to just draw a line from that candle there, you look what candle it touches, or look what candle it goes into, and it's not going to show you a thing. But you put the stop loss, instead of putting it underneath this low to get wicked out, and then it move into direction. Just put the stop loss underneath the safety candle. So every time you get in pullbacks, I mean, this is not the perfect example, but every time you get in pullbacks, might be better off.
So you're saying the safety candle's the one with the pin bar, the one with the long wick?
No, it's not. A safety candle is, what a safety candle is when you get a pullback like this here, you've got a push down, break a structure, or a big push down. Don't count this as a pullback, even though it's a big bar. You need two good bars, and this is not a good bar.
Okay.
Doing nothing. And if you fib that, that'll probably just pull to 30 or something. Yeah, look, there you go. It don't even bounce past the 30. It does bounce past it, but it's only wick, so it don't close below it. So what I'm saying is price ain't good enough there. Price, right. You want price, and this is, I've just picked this up. You want price there. You want price to move into areas like this. Now, I know this is 15 minutes, but on the hourly you would probably get into. But that's what you want to be aiming for, pullback. But what I'm saying is, for the safety candle, is you wait for a valid pullback, and that's into a decent area like these kind of areas, and then you just go, instead of putting your stop loss just here below above this, for then maybe a wick to come up, wick you out, and then like this, just say a wick will come up, bang, put you out or something. So you just go across to the left, find the candle that it touches, and then the candle that it touches, your safety candle then, this candle is your safety candle. So then your stop loss, instead of moving it tight and not giving you trade room to breathe, you put it above the safety candle. Because what
Got
you'll
it.
find, and you see it with trend lines all the time. You know, I don't trade trend lines, but you see it with trend lines. Sorry for anyone who have repeated this. You see it with trend lines all the time. You'll get that, and then you'll get that, and then you'll get that, and that's because everybody. Second. That's because everybody's stop loss is there.
Yeah.
Next one. So obviously, their
Well,
stop losses are there.
like,
So
when the profit's taken, they'll move it above the entry.
Yeah. So what I'm saying is that's why the stop. That's why you're getting manipulation. That's why you get it. Just stop losses out, because then you'll get another one up here, and it'll wick below this. It will wick below this because that's where people's stop losses are on this trend line. Last time it touched the trend line, so then you get another. Obviously, you get that. It goes on into the same way, but that'll just be a wick. One stop loss to give it power to keep going.
Yeah.
That's all. So that's the idea of the safety candle. And if you back test it, you'll see it. It works wonders. I mean, all you've got to do is this 4 a.m. candy. Where is it? I wrote to him in this the safety candle. He said he tested it. The safety candle concept is a game changer. I just put, obviously told you, mate. It's amazing. Not heard it discussed by anyone. I've been back testing it since last night, and it's pretty good how it holds up. You know, so you know, like if people are like going through and back testing it, they're not gonna if they're gonna be risking their own capital, they're not gonna back test it shit, are they? They're gonna back test it, you know, and see it holds and it's relevant to them. So if you're in this trade, you just go across to where your candle is, and that's where you put it. You've got room for your trade to breathe. I mean, it's just a safe option, but you can follow that. You follow that on a lower time frame. But here's one. Look, here's one. It's not the clearest, and you don't see them straight away. But I did say 2 candles as for a pullback, even though it's not a big pullback. Obviously, people would still see it as a pullback, and then you get stopped out just. But then if you would have looked where it came back to this candle. This is like not the best option, best thing, but it works. So there, look, that's your safety candle, and that's where your stop loss goes. Instead of under this, because you've got a wick back up. So people put the stop loss just under that, and then to get stopped out by a few dollars or whatever it is, or whatever you're trading, get stopped out. But whereas if you use your safety candle, a lot of the times you'll see this little low, this little miniature pullback gets broken.
Yeah.
It might not look major to you, but when you're in a trade and you see this, like just say a couple of dollars, and you kicked out, and then trade keeps going. I know it's not a massive move, this one, but you know what I'm saying? Yeah. It's literally kicked you from a couple of dollars, and then you're kicking yourself, and you feel like putting your head through your screen. If you just wait till the pullback, and you use the safety candle, and just below the safety candle, it's very, very, very good how it holds.
Great.
How it does,
Really
and it keeps you in your trades. It keeps you in your trades long.
Scopes, I've got to jump into another call.
That's fine. That's fine, mate. No worries.
This is great. I'll send you a request to join the channel. But fantastic, thanks.
No problem.
Cheers, man.
I'm about done anyway, nearly. So I'll invite you to course, and you'll.
Brilliant, great, yeah. Thanks.
All right, but no problem.
Everything's recorded for you.
Yeah.
On YouTube.
So, I think you should try to. Do you think you could be able to code that safety candle feature?
Yeah, absolutely.
It's good how it holds, David. I've used it myself. So.
Yeah.
So
Sorry.
Is it going to sit on the YouTube channel, or?
Pardon?
Yeah, go ahead,
There's
David.
Sorry, there's a recording of everything that Scopes spoke about tonight. Yeah, so I'll put the link in there for you.
Oh, great. Okay,
Okay,
thanks.
no problem.
Right, sweet.
And we're going to work on an indicator together to try and get it so that we can set them up with bots.
Yeah, brilliant. Can't wait.
Yeah.
Yeah. And anybody who wants to send me a message, I will invite you to the course. Find it helpful. Yeah, if you do, just if you see anything that's no good or you don't understand something, I'll have a message. If you see something I could improve, because I plan on doing another one, what goes with this. If you see anything that I could improve or any way from the next one, then take it back off anyone. But from now, this is the follow the trend. These are the rules. I mean, you don't have to copy me or copy every little thing I say. It's just this is how I do. And sometimes you're not going to get it's going to hit the 1 hour POI and it's gonna bounce straight up, and you're not going to see a 15-minute. I mean, I could show you an example of what I mean by that. If I just load that one, it's PC. Here. So this is what I mean by this 15 minutes thing. So we're in the 1 hour here. This marked out as a 1 hour POI. It's hit it multiple times, but this would have been, even on the 15-minute structure, this is the last high when it hit here. The first time it hit this box, this POI hour, that would have had to be my 15-minute breaker structure. Even on the 15-minute, that would have been a 15-minute breaker structure. That was the highest part. So, a lot of the times, you're not going to travel that far on a 15 minutes. If the 15 minutes just like this, you'll see like a little structure like that, you're going to easily break it. But if you've got a structure that's up here, I skip trades. I'm not even bothered. Don't need to get into something. A lot of the times you're not going to see a perfect breaker structure. You're going to see a lot of messing about, a lot of mopping in areas. And there's mopping in areas. Obviously, it's just taking highs and lows before moving. When I see little stuff like this, I don't trade. I'll just leave it. I'll wait for a clearer structure. So this here, it is a break on a 15-minute, but as you can see, you got an immediate reaction. We're straight down. So to me, it is a break, but not a valid break. That's a valid break. Need at least this closed above it. This closed above it. Not the biggest of candles, but it still closed above it. Was a valid break. And price went higher than this and actually reached this and killed that close as well. So I want to say you don't have to copy my exact rules, but I don't get loads of trades by following these rules, but I follow them very, very tightly. And if the POI is small on the hourly, I'll try a little limit order. But a lot of the times you're not going to get the double POI. It's up to you how you do it. Your TPs, you can do it how you want. Recent structure, 4 hour structure, anything you want. I'm just putting information there where what you can learn from, and you can probably change some of these rules you want if you want yourself. But I'm showing you the actual ways that have made me make money and to me out of shit markets. So I'll break the trend with a couple of diagrams in to show you what you do and how you analyze the breakout waves. And then there's one straight after it with a BOS bounce. Then I've got a bit of Elliott wave to talk about. I don't know whether to put it in this course, and then the momentum of the waves and stuff like that I've got to look at, and then that's about it for this course. So I've got another 2 sets of rules and a couple of little tiny extras, like the safety candle feature and stuff like that. And then this course will be done, and I'll be planning my next one if everyone has found this helpful. So yeah, that's for me. That's me about done. I'll just check for any questions on the. What am I here? Where's my live? Oh, here it is. Check for any questions.
Just the
yeah,
one
just
you
that one.
answered.
So yeah. Right, yeah. So that's about me. So no one else has got any
Fantastic. Thank
questions.
you very much. I don't know if anybody else.
Got
No.
general chat here. See if it was. Right, yeah. So yeah, that's about me done. Anybody who watches the recording of this after on David's YouTube, if you've got any questions, send me an inbox or feel free to tag me in general chat, and I'll answer it as soon as I can for you. And I hope you've enjoyed this, and I hope you've learned something new, or you can use anything of what I've told you today just to add to your profitable strategy, and I hope it helps you out. And thanks again, guys.
Thank you very much, Hope. I will get to coding something for you next week, and I'll send it to you. Thank you very much. Great stream again.
All right, man. All right.
Take care.
How long's it been going for anyway?
We've been going 1 hour and 26 minutes.
It's a pretty short one then today, wasn't it?
But it was still good.
Yeah. So yeah. Anyway, thanks, David, for
Thank you very much.
letting me do my lives and that, and thanks for everybody who's watched it or watches it on the replay.
Thank you very much, mate. Always full of packed information. I will put the link in the general chat so that you can post it in your room. Have a great evening, and thank you very much, mate.
All right, cheers. Thanks, guys.
Everybody. Bye.